Quantum Cosmos presents Certified Financial Guardian, a seal of ethical selling. Privileged to bring you Ivy Subramaniam.
Hi.
Ivy Subramaniam, or Subbu as we call him, is the veteran in the financial services industry, having an experience of over 3 decades. He began his career with Quantum Family in 1996 when he joined Quantum Advisors Private Limited. Today, he is the director of Quantum Mutual Fund and also the CEO and CIO and managing director of Quantum Advisors Private Limited. Subbu has built a treasure trove of information for investors and historical perspective to offer investors and in their financial journey. He is extremely passionate about investor education, with him featuring in more than 80 Path to Profits events in multiple cities over the past decade, and also actively answers investor questions with interesting perspective through Subbu Solution. Subbu, thanks for joining.
Thank you, Ronak.
We'll discuss managing money with values and ethics.
Sure.
My first question: the Quantum Group is founded with the tenets of values, ethics, integrity, and transparency. This is rare in today's competitive environment which we are living in. Can you share your thoughts with the IFA fraternity in terms of handling investors' money?
Sure. Thanks, Ronak, again for the introduction. Coming to your question, I don't believe that it's a rare thing to follow the principles of ethics, transparency, and have all those values. I think there are enough number of people out there who do follow that. But either they are not well known or they are not written about, and others are not aware. But in every field, I do find that there are a lot of people who look at all the 3 tenets which you said: transparency, ethics, and integrity. Coming specifically to your question on the IFA community, if you look at that business, it's a business of trust, right? In any profession where there is a trust involved, be it the field of medical field or be it in the field of finance, it becomes a very important role for you to play. And therefore, the IFA, being in a position of trust, has to be extremely careful in how he handles the client's money as well as how he advises them. So there, all the 3 tenets which you said, ethics, transparency, and integrity, they all become very important to answer certain questions like what sort of advice to be given, what sort of inputs one needs to have before advising clients, the do's and don'ts of the business. All of these will get answered as you question yourself on these 3 broad parameters. And integrity is something which is far beyond even honesty. If there is Mr. A and he robs Mr. B and then he goes to the police station and says that he robbed, he may be honest, but there was no integrity in the first instant. So you need to clearly differentiate what is honesty and what is integrity. And the integrity is definitely on a much higher plane. And it is important in the field of finance, in the field of advising, to have a solid integrity before you undertake that activity. All of these are not very tough to understand. Many of these are learnt at our homes, at dining tables where our grandfathers and fathers or mothers advised us. So it is using those tenets in the business will help in the long way in building a very sustainable business. Okay. And that would be my advice, that while you may be skilled in your field of finance, you definitely need to ensure that you follow these basic tenets of doing business.
The capital market regulator undoubtedly has taken a number of measures in the interest of investors. So one is disclosure of commissions, the ban on upfront commissions, direct plan, and lower expense ratio, of course. But amidst all these positives, IFAs are somehow unhappy, disgruntled. What will be your advice to them?
See, if your role has been to really look at the long term and build a very sustainable business, I think all these questions or all these points which you mentioned that the regulator has come up with, the IFA would have anticipated them and would have already built his business accordingly. The IFA will be nervous if his focus has only been on money making and not building a long term business. Then there would be nervousness as these new rules come into play as to how do you implement those new rules, what impact it will have on your income, all of that will make you nervous. But if you had anticipated and if you were careful about building your business for the long term, I don't think any of these points which you said would have made you nervous at all, because you know that all these points will help you build a long-term business.
Right.
And therefore you would have actually welcomed it when it was announced. And if you were smart, you would have probably anticipated that this was coming, and on your own you would have implemented many of these points which you said, which is to focus on the investor, keep the cost low, ensure that the advice given is a proper advice. All of that you would have done. It would not have made you nervous.
Right. Yeah, so the only thing that is making them nervous is that the cost of compliance somehow seems to have gone up than the revenue.
I think this is more of a temporary mismatch. Initially it may look like it has gone up, but I think it will be more than compensated with a handsome revenue growth going forward. At the end of the day, the client also has to feel comfortable that there are certain rules and regulations being followed, there are proper ethical framework being implemented. Then the client also will feel comfortable parting with a higher fee structure, and that in the long run will benefit the IFAs. So if you are focused on that, I don't think you will really worry about the short-term implications of the business.
And besides values, ethics, integrity and transparency, what are the key things the investment advisor should do as regards practice management goes to build a successful investment advisory practice?
I think there are many other basic tenets which you need to know. Number one, of course, you need to understand your business. You need to understand the products which you are trying to advise upon very well. You also need to understand the clients very well. You need to understand their risk appetite, their goals, and all of this is very dynamic. Right. So while ethics, values, transparency, they are solid reasons to have, apart from that you also need to build these skill sets. Communication is a very essential tool to have. How do you properly communicate any investment idea with the customer? Right. That becomes very important. Succession planning is very important, right? After all, you are building a business. If tomorrow, if the IFA, something was to happen to the IFA, then what happens to their clients? Does the business go on or does the business stop? So the IFA has to worry about succession planning, has to keep proper records, and if he has got employees, there should be a fair compensation given to the employees. The employees need to be trained on variety of soft skills. So all the key points to run a successful professional business, you need to implement all of that, apart from ensuring that all the other points which you said, like ethics, values and transparency, you need to build up on all these other issues as well.
Domestic savings in India is on a constant rise. Saving hard-earned money is somehow ingrained in us, but everyone is not aware of where to invest, how to invest. And so in this case, how do IFAs can offer fitting investment solutions to their clients? What education, investor education should they take?
Sure. So if you look at the savings pattern, and even if you look at how India has evolved over a period of years, I think the IFAs will have a very exciting time going ahead. The reason I am saying that is, again, you look at the people who are working in the economy today. Unlike earlier times where somebody who joined a new job and then they would probably work for many years and retire from that, now that trend is changing. And there is a variety of job opportunities coming up, and therefore the cash flows in those job opportunities will be very different than the traditional ones. For example, there are people who are radio jockeys, there are people who are dietitians, or people who work in gymnasiums and teach you how to do an exercise. There are people who work with delivery companies like Swiggy. Now each one of them will have a very different way of earning money, and their cash flows will be very different. So an IFA will definitely have a big role to play in that space. On the other extreme, you also see the ultra high net worth individuals also being in large numbers. Yesterday we were looking at some data. Today India has around 30 billionaires compared to 20 years ago. So the distribution of wealth has been fairly disproportionate, I would say. So you have a lot of entrepreneurs who have become the ultra net worth, who have joined the ultra high net worth league, And the kind of advice which they would need would be very different from the kind of advice which a normal man or a salaried man would need. So again, IFAs can play a very big role in that space. And in between these two extremes would be a lot of families which are becoming wealthy, and they are not yet on the ultra high net worth category, but they definitely have a lot of wealth, and the kind of advice, the kind of risk appetite which they will have will be again very different. Overall, I would say the IFAs have a huge role to play, and there is a limit up to which even banking can play in this field. Today banks are also advisors, they are also mutual fund distributors, but I don't see that as sustaining in the long run. I think the IFAs will probably have much more stickiness with the client, and they will be able to do or offer much better service than what the banks do. So that would be my advice, that look at the category of people whom you can advise, and then you develop skills accordingly. The way you handle an ultra high net worth individual, and the way you communicate, the way you present certain products will be very different from the way you will do it to an ordinary man. And that is what an IFA should be focusing upon. Apart from knowing the products, apart from knowing the risk and return of a product, these other soft skills, technological skills he will need so that he can cater to a larger number of people. Sure. So that is what I feel that it looks very exciting for the IFAs. Domestic savings would, I think, continue to be reasonably high in India going forward, and they will have a much larger role to play.
Sure. And what will be your advice to IFAs or mutual fund distributors who are practicing in B30 cities? Because most of the inflows are also coming from these B30 cities, although gradually, and much of it is coming to equity funds.
So, one of the assumptions we are making is that the B30 or the second tier, third tier cities, the people may not be aware as to what equities are. We need to check that assumption. Remember that people have probably more time in these cities, and now they have access to internet, so they can read and understand the product very well. So instead of assuming that they are worrying about the fact that they are investing in equities, you need to first test whether they know equity product very well. It is quite possible that it may surprise you that they actually know the equity product very well, which means what is happening currently is quite good. On the other hand, if your investigation reveals that their knowledge on equity is very less, then accordingly you can put in work in terms of educating them, telling them the pitfalls of equity, and therefore how they need to construct a portfolio which is a combination of debt and equity. So net, to assume certain things about B30 or second tier, third tier cities without investigation would be wrong. We will have to investigate, the IFAs will have to investigate and find out who are the people who are investing and what is their level of knowledge before they can say that yes, this is how they should invest and this is the kind of advice I will give.
Interesting. How differently should IFAs and mutual fund distributors approach an investor who's just started earning, who's just started making his career, vis-a-vis someone who's 50 plus age and he's settled in life?
Yeah. So first again we'll have to recheck these assumptions, right? Earlier people who retired by around 60 and their expectation about their life was around 70 or 75 behaved in a different way. Now the life expectancy is going up, people are living at 80, 85, even 90. So your retirement age needs to be rethought over. Your savings pattern still needs to grow. You can't just de-risk everything by the time you are 60 and put it in fixed income, because I think it still needs to grow over the next few decades. Right. It's also an asset class which can be transferred to the next generation, therefore you can still invest in equities. So anybody who is above 50, instead of just assuming that their risk appetite becomes lower and they should reduce their equity, you need to check it on case by case basis. Similarly, on the younger generation, if you are thinking that their risk appetite is high, you need to test that assumption by finding out what exactly are these young people doing. Again, going back 10 years, 15 years earlier, people used to work in one company for the rest of their lives, which is very different from today's youngsters who probably keep moving every 3 years or 4 years, and also they check out on different careers. How does their cash flows look? Where should they be saving? So instead of assuming that the youngster will have a risk appetite, you need to take all this into account and then you probably will be able to better advise the youngster that hey, your risk appetite is low, medium or low, and therefore you need to relook at your investment pattern differently. So both, I would say, from a youngster level as well as people who are above 50, the assumptions need to be checked.
Sure. We are in 2019 and it's getting exciting by the day because it's an election year. So what's your outlook for 2019, and would value investing be the flavor of 2019?
See, we don't really advise on a yearly basis, but having said that, if you had seen the video which we had published a few days back, we said we are excited about 2019 for a number of reasons. So one reason could be that maybe because of the worries about election, the markets could be volatile, and a volatile market is always good for a value investor. It allows them to invest in stocks at attractive prices and at the same time sell out on those which have become expensive. So we at Quantum are really excited by possible volatility which may come up. But otherwise, if you look at the economy, while things have slowed down, in general capacity utilization in the industry is moving up. It is going higher and higher, which means the return ratios will start to look better going forward. So the profitability, the earnings growth will definitely look much better than they looked in the last 2-3 years, and that is exciting. Given that kind of earnings growth, while some valuations are expensive, in certain sectors we find the valuations still at very inexpensive levels, and therefore we are excited about the outlook for 2019 and beyond. But I don't really want to hazard a guess as to what will happen in 2019. Anything can happen.
Okay, my last question, Subbu, you read a lot. Yeah. Which are the 3 books you will recommend to IFAs, mutual fund distributors?
See, there are a lot of books one can read, but offhand what comes to my mind is any of the books written by John Bogle, because it relates very much to the field of finance, to the field of mutual funds, to the field of advisors, and he has a lot of inputs as to how things have evolved in the Western world, from active management to ETFs, from a high cost structure to a low cost structure, from advisors being compensated by the funds to advisors being compensated by the clients, and those changes are happening in India right now. So any book by John Bogle would be good. Then I don't remember the author of this book, but I read somewhere this old book called Winners Don't Cheat. So if you are really trying to build an ethical framework for your business, I think that book also will be a very good book. And the last one is actually a book called The Company, which is again questioning a lot of assumptions about how the companies came into existence, about the corporate world, about the rules and regulations that influence corporates. And it's important because it makes you question about corporate governance. So if you are trying to build a business, if you are an IFA who is trying to build a business, some of those corporate governance questions will become very relevant for you to understand. So that's also something which I will recommend you to read.
All right, Subbu. Thanks a million for joining us, and I'm sure with your valuable insights, the IFA fraternity will definitely benefit.
Thank you very much.
Thank you.
Thanks.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.